With so much uncertainty in global equity markets and interest rates continuing to struggle against the inflationary tide, a greater number of investors are looking to property for peace of mind. Whilst many investors are looking for long-term capital growth, others are seeking stable and reliable passive income streams. But what is the cost of this peace of mind? With risk aversion generally comes a lower expectation of return on investment, but not always the case. Welcome to our latest episode of the Harbour Property Group podcast. I'm Chris Thompson, and today we'll be taking a closer look at assisted living and how the savvy property investor is securing net double-digit fixed property investment income and giving a little back to society in the process. I'm joined today by Rayna Hunter and Alex Bradley from LH1 Global, who very kindly offered to tell us all about this forward-thinking investment strategy. Hello to you both. Maybe we could start with some brief introductions.
Yeah, hi,
Rayna,
Chris. I'm going to pull rank here and go first. So I'm the CEO and head of global sales for LH1 Global. We partner with developers as their sales and marketing partner, and we're known as the probably UK's #1 international off-plan property consultants. So assisted living is something that's very much in our focus at the moment. That's an alternative investment, so that we ensure that we're providing a wide reach of numerous investment opportunities for, as you rightly say, the savvy investor. So over to you, Alex.
Thank you. Yes, my name is Alex Bradley. I work here at LH1 Global as an account manager. My main role here really is securing new agents like yourself, Chris, and also managing the accounts that we currently have.
Great. Thank you very much, both. Rayna, to you first of all, what would you say are the main benefits of this type of investment strategy, assisted living?
Well, assisted living is really quite unique, and it's very much a new sort of product that's exploded in the marketplace, because obviously it's a truly hands-off investment. So for anyone that wants to diversify within their property portfolio, it's an excellent option, not least of all because of the yields that we're seeing. And of course, as you rightly said, it's an ethical investment. So hopefully that gives you a little brief synopsis.
Yeah, sure. And I guess, investors are becoming increasingly cost conscious, and, zero cost, no break clauses, outright ownership, those sorts of things are particularly helpful, aren't they, with assisted living?
Yeah, 100%. I mean, 100%. It is a truly hands-off investment. So it's exactly that. There are no costs to the investor other than the initial outlay of purchasing. But what's really interesting about this product is that historically it was really only available to the big institutional funds. So actually this is giving the independent landlords the opportunity to invest in something that historically it was only the big boys knew about, the best kept secret in town. So I think it's a great opportunity for the investor that's sort of cash rich, time poor, wants a really good return on their investment, because we are seeing those investments at 10% net yields. And we know, as you rightly say, there are no service charges, no management costs. It is a fully repairing and insuring lease format, if you like, in the format of a management agreement. So it's an excellent opportunity for those individual landlords.
Sure. And a particularly lengthy lease as well. So that sort of long-term peace of mind where you can just jump in, invest, and as you say, fully managed, so you can just leave it over the long term to generate these healthy levels of income, can't you?
Correct, because with our investment assisted living product that we're marketing at the moment, the assisted living provider that we work with is offering a 25-year management agreement. So the way that it works, at the point of purchase completion, the landlord also signs a 25-year management agreement with the assisted living provider. I think that's pretty much unheard of in the market. We know of other assisted living providers or even social housing providers that are offering shorter lease lengths, but how great is that? You know, you as a landlord can sit back on your sunbed in the Bahamas, sipping your cocktails, knowing that for the next 25 years, you're just going to get that income rolling in on a monthly basis. I mean, it's a simple no-brainer for the savvy investor that really perhaps is a bit more speculative and wants alternative products within their portfolio.
Brilliant. Thank you very much. And Alex, would you mind sharing with us maybe a current example of what's available with assisted living at the moment? Any current projects?
Of course, yes. So we have a development in Doncaster called Harworth House. It's 94 apartments, so a combination of studios, one bedroom and two beds. All of the studios and one beds are priced at 156,000. The two beds are 182,000. As Rayna mentioned, the 10% net yield is irrespective of which one you decide to purchase. It's based off your purchase price.
Thank you for that, Alex. So maybe one for you, Rayna, here. So 10% rental yields with upward-only rent reviews in line with CPI +1 and little to no costs. So how does it all work? How is that affordable in the long term?
Well, that's a good question. I mean, obviously, we know that demand outweighs supply. And I mean, I suppose it's a sad reflection of our society here in the UK that there is such massive criteria and need for this to provide this accommodation for these vulnerable adults that require housing. I mean, historically, we would have seen that people that fall under the category of requiring assisted living would have perhaps been housed in institutional homes or even, you know, in hospitals. But we know that the specific criteria that we're appealing to as residents, all they basically need is a home. What we love is the fact that this assisted living provider, and I'm sure many others as well, but we focus on our particular one that we're delivering for at the moment, they're really offering a true management service. So they're providing these homes and helping these people live an independent life, you know. So because demand in our society is so high, we can't actually feed the engine as much as we would like to. So we need more blocks to accommodate and provide much needed homes for these vulnerable adults. It's interesting, you know, we've seen that this is really exploding in the north of England because we know that capital values are lower in the north, which makes it affordable option. You know, for me, this is a simple no-brainer. This is a fabulous opportunity, and it's a double whammy win because it's a win to the savvy investor because they're for a cash outlay, they're getting a huge net return, and obviously it's a win for the assisted living provider, and more importantly, what a fabulous win to those adults that require this accommodation, because without these investors providing these much needed homes, where would they be living? So I think I go full circle. Demand outweighs supply. We need more supply, you know, and it's just obviously a great opportunity.
Yeah, absolutely. I think
hopefully that answers
certainly,
your question.
Absolutely, yeah, definitely. I think, as you say, a sad reflection, but equally, I don't think you know, we're going to catch up with that demand anytime soon. So. Okay, and what about risk to the investor, Rayna? So what happens, for instance, if there's damage to the property, any required maintenance, rental voids, you know, all the sorts of things that can pop up and bite us with vanilla, if you like, to investments?
Well, that's why this is such an attractive option to the investor, because it is truly a hands-off investment. I mean, the assisted living provider is obligated to pay any maintenance charges, service charges, ground rent, and so on and so forth. Of course, I mean, I sometimes get asked the question, oh, well, what happens if the roof needs repairing? Well, obviously, that falls under the freeholder's obligation. But for the landlords, the individual landlords, it is truly, there are no costs. There are no voids and there are no maintenance or management costs whatsoever during that 25-year management agreement that they sign with the assisted living provider. So it really is, it is what it says on the tin, you know, it ticks those boxes.
Yeah, great. Thank you very much. And that's, I suppose the appeal with property full stop is that you can plan from the start, you can put your numbers into a spreadsheet, you can pretty much map out what your investment's going to do over time. But, you know, the small variables with a traditional sort of buy-to-let investment property, the variables might be narrowly property prices over time or interest rates over time. With this one, it literally is just, it's a cash investment. All of the noise is done at the start, the pain is done at the start, and then you just literally, you know what's coming on a month by month basis, which is great.
Correct. Well, it's important. Sorry, Chris, I interrupted you. That as a woman, that's what I always do. I talk a lot, so apologies in advance. Alex is more than used to that. But, you know, that's the key. You more or less said it yourself, and it's very important to remember this. This is not a standard buy-to-let residential property purchase. This is a yield-based investment. You know, the asset, the property, is literally a bonus, you know?
Yeah, sure. Okay, and one of the biggest benefits, Alex, maybe one for you, is the long-term reliability of the investment. So a 25-year lease agreement, that's proving obviously incredibly popular with investors. But what would happen if the current management company were to cease trading, for instance?
Mm-hmm. So in the worst case scenario, as you mentioned, if the manager was to go out of business, there is an independent arbitrator in place called MyShon. So they, in the first instance, are actually in charge of approving the buildings for the assisted living provider to be able to operate there. They would have to source an alternative provider if they were to go out of business on the same terms and keeping the same quality and attention to care really for the building.
Yeah, brilliant. Thank you very much. So I suppose we need to consider the exit. This being a yield-based investment, there's a certain amount of value baked into the deal, which brings us on to that exit piece, I suppose. So, Rayna, what happens when the landlord wants to sell? What options do they have?
Okay, well, they've actually got two options, which is with us, not with everyone. I hasten to add that might have the opportunity to find this. So we always say you can paddle your own canoe and you can exit at any time during the 25 years. The only caveat is that you'd have to find another cash purchaser that would then come in. They'd buy on a lower yield but a higher capital value, which would obviously give them the profit over and above the rent that they'd received over that period of time. Or there is also a 3-year buyback option, which means that the developer, if he chooses to exercise that option after the 3 years of originating, then landlord is obligated to sell to the developer because the developer is looking at sort of perhaps buying them back into his portfolio at a later stage. And my understanding, I think Alex is probably more over this than me, but Alex, am I correct in saying that they get a 30% uplift on the 3-year buyback if they take it?
Yes, correct. So it's a minimum uplift of 30% after 3 years.
Incredible.
So that, you know, I think that probably gives an investor some confidence. We've seen investors, some want to stay in for the long term, you know, that and sort of be the holders of their own destiny. Others like the comfort of thinking, well, at least I know I'm only in it for 3 years. But obviously I caveat that the developer, it is only an option, and whether or not he chooses to exercise it, I'm not Mystic Meg, so I can't predict what he's going to do when those 3 years are up. but knowing him as I do, I think that he will probably exercise his option.
Excellent. Thank you very much. So we've talked a little about Harworth House, but of course there are many other options which will be reassuring to investors looking to build stock levels in this particular investment discipline. But there is a bit of a note of caution with timing, isn't there? Because this one is particularly rewarding, 10% yield on this particular development. So is that going to be the norm, or are we to expect slightly lower levels of rental income in the future?
Well, you're correct, Chris. Yeah, sorry. Chris, you are correct. When this product was first launched to market, then they tested it with the 10% net yields. Obviously, it proved so popular, and they realised that they needed to sort of alter the model, and sort of they always bring everything in line with inflation and so on and so forth. So, as from April, any new blocks coming to market with this developer and this assisted living provider will be on 8.5% net yields. So therefore, and please, this is not a sales pitch, this is fact. We have limited number of available units right now on the 10% net yields, but that figure isn't going to be around forever. It's like you always want to sort of be the first person to get in to the next best thing, and obviously those buyers that are buying in now are the ones that are reaping the benefits. We have actually, interestingly enough, seen buyers that bought in on the first launch, the first round of these available units. They've come back a second time because they're so pleased and satisfied with the results that they're seeing month in, month out.
Yeah,
so I say snooze, you lose.
Yeah, indeed, and I think that's quite
snooze,
typical.
You lose, yeah.
With these slightly different, I say different, that makes it sound like this isn't a property investment. Of course it is, but there's a slightly different approach with this one. And I think once you've, as you say, put your toe in the water, you've tried this once, it's just, you used the phrase earlier on, it's a no-brainer. It's it's a very addictive one to come back for more with, I think. So
Absolutely.
Alex, one for you. So many investment disciplines available in the UK property market, and the fact that we're all different, I guess this approach might not be for every investor. Could you depict exactly what sort of investor assisted living is perfect for?
Mm-hmm. Yeah. So obviously it's a cash purchase. So cash rich, ideally sort of confident with and maybe experienced with this type of product. Cash rich, fully aware of what they're sort of investing into, and as it's very much hands off and as sort of passive income as it comes, it particularly appeals to experienced overseas investors as well, as due to the sort of the way the management is of the property and how it is basically paying, you're able to receive your return with minimal input. So I would say cash rich and potentially overseas as well if they're looking for that.
Excellent. Yeah, thank you very much.
Cash rich, time poor.
Cash rich, time poor. Reliable passive income, I guess, as well. So, I spoke to a gentleman this week who is very interested in this particular product. You'd be pleased to know, Rayna. For him, that was all about the passive income. And again, that gentleman, as you mentioned, Alex, extremely risk averse as well. So great, thank you very much. So Rayna, finally, this investment discipline has a real feel good factor to it. I think it would be fair to say. So property investors, second homeowners, easy for some to say, sometimes draw a little fire when considering fair and affordable housing in the round. But this really is an ethical option where all parties benefit. What are your thoughts on that? Tell us. You mentioned it earlier on, but it truly is an ethical investment.
It is. And what I really like about this investment, and I've spoken to many people, and when I explain, if you like, the category that these residents fall into, undoubtedly most people, whether they be someone within our industry or someone outside of our industry, will always say to me, I know someone that would actually benefit from that type of accommodation. And so I think it's very much a thing that's very close to all our hearts. But what I would like to particularly say and reassure people is that obviously we know that the product that we're selling is specifically for vulnerable adults that fall into a category whereby they're protected, if you like, by the government because of the government's Section 117, which means that vulnerable adults that fall under this mental health category do need to be protected, and they can't just have the accommodation whipped away from them. To reassure, and I'm not trying to sort of pigeonhole or put anyone in boxes, but it is important. I think some people like the comfort of this, that these vulnerable adults, they are people with dementia, autism, not people that require sort of 24-hour nursing care. They're not addicts, they're not ex-offenders, and they're not asylum seekers. Well, we know that obviously there are other forms of social housing that does look after and accommodate all of those types of people, which obviously they in turn, of course, do need accommodation. But for us, the one that we're particularly involved in, and that is, when we say assisted living, it is truly assisted living. That's exactly what it does. These are vulnerable adults that could live on their own. They just need an extra pair of hands. And so, therefore, from my perspective, we're putting something back. This is about care in the community. We all know someone that would benefit from this. So if you can put your money into a long-term, hands-off investment that's helping someone else along the way, but also ensuring that your pension pot, if you like, has a good income over the next 25 years, then why not? Of course, I caveat that, and as you would, Chris, that any financial investment, we can only introduce people to these financial investments. They have to do their own due diligence and make an informed decision. We never profess to be financial advisors. We're introducers. I like to think we're almost a bit like a dating agency. We find the ideal date and we match make that date or that product with that person. So it's always important because we know one man's meat's another man's poison. Some investors, this is not going to work for. So I always say to people, make sure you do your own research, feel comforted. But we're seeing this model explode, and now's the time to sort of get involved because, as we've said earlier, these net yields are not going to be around for long.
For sure. Excellent. Thank you very much. Well, a huge thank you to you both for coming on and giving us a much keener understanding of assisted living, how our clients can interact with it and attract returns in the most ethical of property investment approaches. Remember, your property investment decisions ultimately depend on your individual circumstances and goals, but with the insights shared today, hopefully you'll be better equipped to make a more informed choice. For more information, please visit our website at www.harbourproperty.group for further resources and to book a free consultation. And please don't forget to like, subscribe, and share this episode with anyone interested in the UK property market. But for now, a big thank you to you both, Rayna and Alex, for taking the time to share your insights with us. And from me, thanks for listening and bye for now.